Hello and welcome back to Bunnex Investment Group. In this video, we are going to talk about a strategy, a trend following strategy that will enable you to catch these points with high precision and with simplicity. Sit back, relax and have somewhere to write and take some notes. Firstly, successful trading calls for trading in line with the market trend. Fighting the trend is the first enemy to your profitability. Mostly, trying to call tops or bottoms leads to getting trapped by the market makers. I've seen a lot of traders who try by all means or who actually sacrifice the war of their trading account trying to call the tops and bottoms. So this strategy points out the exact points to join into trends. If it's a downtrend, we are looking to get the rightful points of highs and in an upward trend the rightful points of lows. All this will be simplified as well by use of free indicators that everyone has access to. Let me explain the concept. When trending up or down, the market creates higher highs and higher lows, right? When actually going up, we're saying we have higher highs and higher lows, and vice versa is true. If we are going down, we have lower lows and lower highs. If we can catch the lows in an uptrend, which are these points, and the highs in a downtrend, which are these points, we will have a higher probability of success. However, to do so with high precision, we'll use a concept called inside market retest, which we'll talk about shortly. It's a retest of a retest as shown below. This is the initial top where a lot of traders actually try to get into the market. It's actually a point that comes after traps has been done and some accounts have been blown. After the initial top has been set, we'll actually get a higher high. This is in a downward, this is a lower high in a downward trend, and then this, we call it an inside retest. Of course, it's meaningless in this particular illustration, but we are going to have it on real charts. So the free indicators that we will need are 13 EMA, which was kept here, 50, 200, and 800 EMA. We should have these EMA installed on our chart so that we can simplify how we see the highs in a downward trend and lows in an upward trend with ease. So here are the steps of getting into the market. Step 1, on the H1 time frame, we need to see either 50-200 EMA cross or 200-800 EMA cross. Step 2, we need to see H1 price retest on the 200 EMA or 800 EMA. Then step 3, we need to see, we are saying after step 2, we need 1350 EMA cross. That is either after the price retested the 200 or the 800, we need to see a 1350 EMA crossover afterwards. Then after step 3, we need to see H1 price retest 50 EMA, and we will switch to the M15 right away. M15 is an entry time frame, and then candlestick reversal pattern on the M15 will be enough confirmation as an entry as shown below. In this particular case, we can see the first step is to see this crossing 50 EMA in blue, crossing the 200 EMA in white. Then after that, we need to see price interaction with the 200. Then after price interaction, we need to see a 13 in red and a 50 EMA crossing over, and then a pullback to the 50 EMA. That is where we will actually get into the trend, right? So before we see examples, please note that we have a free Telegram channel where we share free signals, free setups, and trading tips. Be sure to be part of that community via the link that I've shared in the description box below. This is pound against dollar. The first thing that we've said is to see the crossovers. So we need to go back in history so that we can try to backtest and see the points of market entry we could have made. The first thing is to see a 250 EMA cross. We can see this occurring at this particular point. After this, we can see price interaction with the 200 EMA, and then after price interaction, we saw a 1350 blue and red crossover, and then entry should be made on the 50 EMA on a candlestick reversal pattern of the M15 time frame. This was the first possible scenario of our market entry. As you can see, the market actually crossed another one, this time a 200 800 EMA cross. The market came to the 800 EMA. We always want to make a retest first to the EMA above all other EMAs first, and then we see a 1350 EMA cross and a retest of that 50 EMA cross. We can see retest of the 800, 1350 EMA cross, candlestick reversal on the M15 time frame, and entry as the market pulled back to the 50 EMA on H1 time frame, and a 2-to-1 reward risk was going to be made. Right after that, what next? We can see another retest of the 800 EMA, and then market flow, then retest of the 50 EMA in this particular case, and then the market went our way again. Another retest of the 800 like that, then the market actually went to the downside, retest of the 50 EMA, and then it went again in our direction. So basically, if we add in what we call institutional levels, it will be actually highly probable, a highly probable entry, and with that it will be a higher win rate. And watch out for that video that is coming next after this one. On that note, we've come to the end of our today's video. Thank you for watching. Like and subscribe, and I'll see you in the next one.